Hello and welcome back to the future of CRE sustainability. I'm your host, Sean Swentek. Today I'm speaking with Richard Zdunkewicz, Chief Executive Officer at Distributed Energy Clearinghouse. Richard, thank you so much for joining me today.
Thanks for having me, Sean.
I'm really excited to talk to you. I've read a bunch of your articles on PV Magazine. Really interesting what you're doing in the DERS space. You've got a very varied history, a lot of work in DERS and across energy and power. Really excited for this conversation. Now, we've gone from, at the beginning, microprocessors costing hundreds of dollars to now just pennies. How has this transformed what's possible in energy management specific to commercial real estate?
Sure. Well, Sean, it means intelligence can now be embedded everywhere. Sensors, smart meters, controllers, ubiquitous. So now taking that technology, instead of relying on, old information that might be in your electricity bills, owners can monitor building performance at very granular intervals. That data opens the door to analysis and precision in that approach. So you can identify inefficiency, you can value distributed energy on a property, you can understand integrating buildings directly into the energy markets might make sense. And, beyond building management systems, there's, new technology that enables integration with generation, storage resources, and integrate that with the energy market so that the entire energy equation can be seen as an asset, not a liability.
I love that. What is the biggest misconception today with commercial real estate owners about distributed energy resources?
Well, I would say that a lot of people would consider DERs to be simply like a green add-on. But in reality, as I just mentioned, these are financial assets now. Mm-hmm. Solar, battery, and the management of load can be valued the same way you would value any tangible improvement.
Yep.
So owners who only see DERs as a sustainability project, on their score sheet or something of that nature, they're applying a very simplistic valuation approach or no value at all, and therefore they're leaving money on the table.
So I think you're almost hinting at the idea that commercial real estate owners need to almost get into the mindset of an independent power producer, and they have the ability to both produce and control their power generation and consumption and the costs of both of those things.
Yeah, and it's important for a couple of reasons. One is you really understand the value that inures to that set of assets. And when you do that, you think about your decision-making differently, but also when it comes to, a lot of commercial real estate, either as an owner or as a manager, or let's just say something, like a owner-occupied building or a building that you lease for a period of time, but you've got to pay the bill. Mm-hmm. You really need to be thinking about, how can I think of this as something that I can establish a P&L for, mm-hmm. that I can, when I go to sell that building, if I'm going to do that, or if I'm not trying to convince someone about the validity of an investment, I'm dealing with something that can stand alone. So it's important to be able to have that perspective so you can tell the story properly.
I love that. One of the buzziest terms in our industry right now is virtual power plant, VPP. What does this mean for today's commercial property owners? What should they be thinking about when it comes to VPPs?
Sure. Well, it means your building can participate in the power market just as if it were a small power plant. Mm-hmm. So aggregation of DERs, solar, storage, in some markets, clean burning engines, and controllable load. Properties earn revenue for that flexibility, mm-hmm. and they're improving resilience. So the practical translation is your building can now get paid for being more efficient and more responsive to the grid.
That sounds like a pretty good win-win.
I'd say so.
I know that I mentioned this earlier. You've been in power markets and energy markets for 3 decades. Is there a major dramatic shift you've seen that maybe today's property managers or asset owners just still don't quite understand?
Sure. I spend most of my time in the competitive markets.
Yep.
So when markets liberalized or became deregulated, we thought that at the time we were going to get a lot of creativity. And it's taken a while, but one of the things that we're seeing evolve is access to the wholesale market, and so that's going to be emphasized by FERC 2222, right? And that is allowing a load to access the wholesale market. Mm-hmm. So in that regard, we're seeing, the move from fixed pricing to, locational hourly value in the competitive wholesale market. And that's even being reflected somewhat in the regulated utilities. So what that means is electricity is no longer, one price. That's the way, I think it's traditionally been thought of by most people as well. I can't really control it. It's an uncontrollable cost.
Mm-hmm.
Well, now it's an opportunity. So the value of producing or reducing a kilowatt hour depends upon where and when it happens.
Mm-hmm.
So that shift changes the economics of every investment decision. Many property managers still operating with the outdated sort of, I'll call it average rate or fixed rate assumption. But when something has a different value in different places at a different time of day, your decision-making has to reflect that.
It's interesting that you bring it up, especially as it relates to batteries and energy storage, because that adds a whole new piece to the puzzle. Because you mentioned time of day and time of use and the way charges change. With battery storage, you have the ability to actually bend time in a way, right? Because you can save energy at times when energy is cheaper and maybe sell it off when energy is more expensive. So that's an exciting new development really in the space that I think most people aren't taking enough advantage of in the real space.
Yeah. And, as we improve battery technology, that's going to become more and more powerful.
Now, ultimately, a lot of these investments do come down to dollars and cents. If you're talking with a potential client and say the CFO at that company who might be skeptical about investing in DERs, how will the work that your company does and the analytics and data you provide actually help them save money on these investments?
Sure. So if I'm talking to a CFO, a treasurer, I'm going to speak the language that they speak and that they understand. So that is return on investment and risk.
Mm-hmm.
So analytics show where energy volatility exposes the business and where on-site assets, batteries, generation can hedge that risk. But without analytics, they're blind to both the hidden costs and the unrealized value. So if we can introduce analytics that can qualify resilience, market participation, and operation savings in dollar terms, they'll get it. And it's not just about going green. It's all about de-risking from a sustainability and an electricity perspective, those assets in that site.
100%. And I assume that part of these conversations is the financing structure of these assets, right? In today's world, you've got a lot of options, CFOs and the folks participating in this, because there's another party at play in these deals, right? There's the commercial real estate owner or operator, and then there's someone who specializes in developing and installing solar battery storage and other systems, right? And so they have the option of a cash or a loan deal or a lease or PPA and entering into a third-party ownership structure, right? Can you talk a little bit about that and how you might interact with, say, a developer side in this example?
Yeah, so we've got some experience with developers, and most just about every developer that we've done business with, very sophisticated, understands the market, understands their technology. Not all of them bring financing to the table, but many do. And if they don't bring money to the table, then a lot of them know where to go get it.
Yeah.
One of the things we're seeing here lately, or it's really the past few years, is energy as a service or resilience as a service. And so, well, what's in it for the property owner? Well, they don't have to come out of pocket for a significant part of that investment in the near term. They're going to pay for it over the long term, but in an environment where they're trying to conserve cash for some other investment or further operations, they can probably get it to pencil out in the context of how they see a leveraged deal. So anybody's going to first look at what's the benefit to me operationally? What's it going to do to my electricity bill, all those things. But then once they get over that hump, they're going to want to understand, they'll say financial engineering, but how does leverage or how does a different form of financing, how does that benefit, my company? So we're used to having that conversation about, hey, let's look at it from a return perspective. Then let's look at it from a cash flow perspective. And the first layer of evaluation is, what's that going to do for my business?
Yep. Love it. Obviously, our industry is speaking specifically to renewables. Policy regulations are like an up and down constantly. But as you look back at, say, the past decade, what are some of the policy changes that have really changed the game for commercial real estate energy strategy?
That's a tough one now.
Yeah, no kidding, because we're in the midst of another big change.
So 2 years ago, I would have said the ITC, the investment tax credit for solar, Today I'm going to go back and I'm going to say access on wholesale power markets. And I think there is still a long way to go to create and realize the benefit there, but we're off to a pretty good start. So, we've got things like demand response, which we've had for a long time.
Yep.
But now the ability to sell energy, the ability to sell ancillary services,
Yep.
In the competitive markets, those are real revenue opportunities. So again, suddenly your energy assets aren't just reducing your bills, they're generating new income streams.
Now, when you talk about this, it all makes sense. But for your average real estate owner operator, is this a pretty complicated process to start to monetize these assets in this way? And is that part of the service you're bringing to the table?
So, well, if I've got one building and I really want to understand it, I think you can get your answer pretty quickly if your energy manager is conversant or if your consultant is qualified. But if I've got thousands of locations, and then I've got to deal with the reality of the complexity of all the markets and the complexity of the value stack in the way it's differentiated in each market. Mm-hmm. Some are a lot more straightforward, particularly if it's in a non-competitive area. But if I'm in a competitive market, that value stack can get pretty exotic.
Yep.
So I would say for a multi-site property owner or a multi-site business, that's kind of where our bread gets buttered. Mm-hmm. Just to bring to bear the analytics platform that looks at every market across the U.S., whether it's regulated or competitive, understands the value stack, and very quickly delivers answers to our subscribers.
Wow. Now, most buildings today collect a ton of energy data. Many do nothing with it, unfortunately. What is the biggest missed opportunity you see around that data and what people can actually do with that?
This is kind of a loaded question. In my long experience in retail energy, I've run across a lot of very frustrated energy managers or facility managers. So, this is not one size fits all, but I'm going to give you an answer that I think just kind of fits in with the rest of the conversation here. And that is the missed opportunity being the relationship with the energy market mm-hmm. and resulting value. So data alone doesn't create value. Translating it into financial results is what you're looking for. Mm-hmm. So if you don't connect your data to asset value, you're just kind of warehousing numbers.
Yep.
That's where analytics can turn raw data into a business case for capital planning, tenant retention, competitive positioning of your property.
I keep singing this song. Energy is no longer just energy is money in today's marketplace. And so, yeah, you're so correct that you got to turn this data into dollars and cents. Now, you mentioned this earlier. How are smart meters, advanced controls, devices like that changing the relationship between commercial properties and the grid and utilities they interact with?
Yeah. So I referenced it earlier about, passive things. So, this term properties from passive consumers of energy into active market participants. And we're really just scratching the surface, but owners can respond to real-time price signals. They can automate load shifting. They can monetize their flexibility. It's a two-way relationship now. So the grid depends on your building just as much as you depend on the grid.
Well said. We're seeing quite a bit of money come into the market from private equity, institutional investors, especially around energy infrastructure. What do you think's driving that as it relates to commercial real estate?
I'm going to say, well, private equity is astute. So they're and private equity is not huge risk takers. I'll carve out venture capital from that, but private equity has got to see the economics. So I'd say we're seeing improving economics, more predictable cash flows. So DERs generate contracted revenue streams similar to like a lease. What the added upside of grid services. So for investors, the kind of combination of stability and scalability is really attractive. They see infrastructure in a building as the next frontier of real estate asset investment. So with prices for delivered power on the rise and the value of reliable supply also increasing, BDRs are showing improved valuation. So the key for any investor is the ability to see the value and ensure it can be realized.
Mm.
Obviously, private equity seeing this evolution in the market, they're getting more and more comfortable with this as these sort of standalone assets I mentioned earlier.
I tend to believe you're exactly right with that. You've been talking a lot about grid resiliency. How does that tie into a commercial real estate owner's actual bottom line and what that looks like as it relates to the grid?
So, the term resilience popped up in this sort of context, I don't know, about 3 or 4 years ago. And the way that I think about resilience is I think about the grid being resilient, right? I think about a property owner looking for the benefit of that, wanting reliability. So there's been sort of those buzzwords kind of get thrown around at the same time, but I see them as somewhat different. But resilience or reliability is risk management. Think of it as sort of a form of physical insurance, and that has value. So today, a company pays a premium for liability insurance, general liability insurance, property insurance, whatever, but they only realize that insurance policy when there is a loss. So in terms of value, it's the avoided cost of downtime, tenants, lost productivity, reputational damage, how you position your property, all that. Those are the things you have to think about. So owners who can guarantee uptime during grid disruptions, protect their revenue stream, and often command, I would suggest, premium rents. So reliability is not just sort of an engineering metric. Today, it's a financial differentiator.
Yeah. Now, and you're seeing the data back up that rent comment. I've seen a number of case studies now where it's truly driving that valuation improvement. How do you see, I mean, this is the buzziest word of all, how do you see artificial intelligence, AI, changing energy management in commercial buildings today and through the next 5 years?
I believe that building management systems have for a long time integrated some form, elementary form of artificial intelligence, right? It's kind of like, a large language model learns from things. I think, some BMS that has something that, is borderline.
Yeah, like machine learning capabilities. Yeah.
Right. But really, I mean, it's going to automate decisions, right?
Mm-hmm.
So today you stitch together systems to operate a building, to based upon setbacks, to alert someone that an action needs to be taken, or that there's some conservation measure that's been defeated in the system and preventing the system from doing what it's doing. So I think if systems can learn better and get more granular in interacting with the actual energy systems, energy conversion systems within the building, fan, things like that, you're going to be able to capture the nuance of value. So instead of like, hey, look, this has to be big steps on, off, on, off, on, off. And even with today's granularity in that, depending upon how the building is designed, how the HVAC system is designed and how EMS interfaces with it, I think you're going to get a lot more dynamic sort of energy BMS ecosystem that can be a lot more effective.
Very cool. As it relates to the energy transition, is there something that, your everyday average CRE professional ought to understand about what's happening and maybe they're not all the way clued in?
Well, the term energy transition kind of gets thrown around. It's thrown around a lot. And, I guess if you ask maybe, 10 people, you might get 7 or 8 different types of answers. What is exactly the energy transition?
Yep.
So I don't think it's simply another word for decarbonization.
Mm-hmm.
And the energy transition means kind of the re-engineering of both energy supply and what I will call, energy application or how energy is used. So for commercial real estate, it's an understanding of energy more holistically, or property or portfolio properties, and looking at that strategically with energy considerations in mind. So that's efficiency, revenue opportunity, market optionality, resiliency or reliability, and decarbonization. It's all those things. And, hey, when I walked into this building 4 years ago, I thought about it in one way. Now I can think about it a different way. That's in this context, that is energy transition to me.
That makes perfect sense to me. If we look 10 years ahead, what do you think will separate the winners from the losers in commercial real estate in terms of energy strategy?
Yeah, putting on my financial cap a little bit. So I think winners are going to treat energy as a balance sheet asset for this sort of ecosystem, not an expense line. So they're going to monetize flexibility in the cost profile, in resilience, in sustainability, in ways that directly enhance property value, and they will make that a distinct marketing feature. So, just like, here was the architect of this building, or it's a green building, or it's in this location. So it's going to be something distinct that they can hang their hat on. Losers are going to continue to think of energy as the utility bill, uncontrollable item, and they're going to get left behind.
And I'm going to guess that bill will continue to go one direction in the future. I don't see that coming down anytime soon. So
yeah, and that I think that trajectory is pretty much agreed upon by, most that understand what's happening in the energy world.
All right, I want to make sure we don't miss any of the buzzwords. So in commercial real estate, few things buzzier than data centers, and a lot of conversation around what role DERs can play potentially or not in data centers. Do you have thoughts around that?
Well, the thing about that's happening with data centers today is the demand and the timing of that demand is outrun utility capabilities, and that's just, I think, going to pick up. So data centers have always needed, for lack of a better term here, backup power. So you're going to have your peak demand is going to be whatever it's going to be, and let's just say it's 50 megawatts. Well, you had to have 2x that. Well, today, just they're peeling the utility out of the equation. They're having to introduce their own generation assets. And I think, a lot of data centers are not only looking at things like, natural gas-fired generation, they're also understanding what batteries can do for them and what renewables can do for them. So it's not, I think first and foremost, it's how do I serve this load with confidence? If it's a commercial data center and not owned by a corporation that is doing it for its own fundamentals of business, that it's going to have that as a selling point. And then I think that kind of the gravy on top of that is, well, what's the cost profile and what's the sustainability profile that I can put in front of the corporation who wants to use my data center? And those differentiators will be valuable as to how much impact it makes on energy consumption and demand. It's going to be situation by situation.
Yep. It'll be very interesting to see how it all shakes out. I feel like we're still in the early days of how that's ultimately going to play out. Richard, I want to move on to some lightning round questions. Just your quick hit on some of these topics that are I'm asking sort of all my guests. Solar, wind, nuclear. What's your bet for the fastest growing, most dominant renewable energy source in commercial real estate in, say, 5 years?
Batteries.
I love it. I tend to agree as well. Property technology, proptech, obviously a huge industry. Is there a single proptech solution that you've seen applied really well that maybe has exceeded your expectations in the value it delivered?
Well, yeah, there are so many that if I have to pick out, something, I would say it's probably the integration of building management system and batteries that we saw that kind of worked in tandem.
Yep.
And I thought that was a very creative solution.
What about sustainability metrics? If I'm a commercial property owner and I'm starting to make sustainable investments, what is like the first metric I got to make sure I'm checking each morning to see if I'm getting the return I expect out of this?
Yeah. So you're going to set your own metric, but the metric that if I'm primarily concerned with sustainability, I'm looking at what's, if I've got one property and I'm only thinking about the one property, I'm pretty sure that I could have set a baseline for energy for my carbon footprint.
Yep.
In my energy usage, and I can track those against my historic pattern, my historic record every day, and I can adjust that for weather. So it's easy to adjust those things for weather around. But at least I can, if I'm worried about that every day for my business, I can understand on a weather normalized basis how I'm performing in terms of usage and how I'm performing in terms of emissions.
Yep. Complete this sentence. The biggest myth about building green in commercial real estate is
that you get no return. I argue that in today's world, you absolutely get return.
100%. I keep encouraging everyone I talk to, if it didn't pencil 10 years ago, you better be looking at it again because the numbers have changed. Pretend for a moment that you are an incredibly wealthy real estate investor and you've got unlimited capital to deploy across your portfolio. What is the first property upgrade you'd be looking to make that would be sustainable and drive ROI?
I'm going to assume that I've already invested in BMS. So if I haven't invested in BMS, then I need really good building management systems.
Mm-hmm.
The next thing that I would do is, depending upon what type of building, what type of commercial building, because if it's a high rise, it's one thing. If it's a warehouse, it's another. But I'm going to look at a combination of solar and battery.
I was hoping you would say that. Richard, this has really been a pleasure. If my listeners want to learn more about you, the work you're doing at Distributed Energy Clearinghouse, where's the best place for them to go?
Yeah, so declearinghouse.com, declearinghouse.com is our website. And I can be reached at Zdunkewicz at declearinghouse.com.
And I know you're on LinkedIn, and hopefully they can connect with you there as well. If that's wonderful. This was really a pleasure for me as well, Richard. Thank you for joining me on the show. For my listeners, thanks for listening in. I'll see you on the next episode of the Future of CRE Sustainability.
Thanks, Sean. Take care.